All right, welcome back. We've got our Tesla Q4 earnings update, and we're going to take a look at the chart first before we get into some of the numbers. Pretty muted move here for Tesla, not a huge reaction to the earnings. We did see it climb up a little bit after earnings, but sold off on Friday afternoon. This is a very small move, what is typical for Tesla earnings. So last earnings we had, Tesla was $215, kind of hard to believe, and it just shot up after that. So a lot of that has to do with the election. This is pretty wild move. It's up over 100% in the last 3 months here. So makes sense that we didn't get a big move. If anything, I was expecting a big move to the downside. We did see the delivery numbers were worse than expected. And when we get into some of the numbers, you'll see the numbers weren't good. So I'm surprised that the stock is holding up as well as it has so far. So real quick, revenue, they reported 25.7 billion with an estimate of 27.6, and the earnings per share, they reported 73 cents with an estimate of 77 cents. So misses on both the top and bottom line there. Let's go ahead and take a look at the numbers here. So Tesla missed Q4 expectations, revenue declining 2% year over year. Automotive revenue fell 8% year over year. Gross margin to 14%, that is down from 17% in Q3. So that's all bad news, right? If you listen to my last video, this is a perfect example of how the market is really changing these last, at least since I've seen the last couple of years. There's a story and there's fundamentals, and the market is really giving a lot of weight to the story. And there's still people that are weighing heavily the fundamentals of the company, of the business, but people are also looking forward and saying, okay, well, what is the runway? What's the story down the road? And are we developing that story? And if that's the case, the market will give you a little bit more grace when it comes to your fundamental numbers as of right now. So I feel like that's a big shift that's happened in the last few years, and Tesla is the perfect example of that. So on the bright side, we've got Tesla Energy business was a standout with revenue more than doubling to 3.1 billion, helping to offset the vehicle's weakness. So their energy is killing it. We'll look at some slides at the very end, but that is the big bright spot for the earnings. They missed on their earnings, but they did recognize some of their Bitcoin gains. They didn't sell any Bitcoin, but with some of the new accounting laws, they were able to recognize some profit on this quarter's earnings for Bitcoin. That means the flip side is going to happen. They'll have the ability to recognize some losses. If Bitcoin plummets down, they'll have to adjust that. So I think they have $1.2 billion worth of Bitcoin on their balance sheet that they bought back in 2020. So let's go ahead and keep scrolling down here. Missed revenue and EPS, talked about that. Margin compression, cuts due to hurt the profitability. So some of the margin compression was they were doing a lot of price cutting, but also they were doing interest rate subsidization. So they were helping people with zero interest rates to get into a car to get them off the line. They were having to move some of the old Model Ys, and they were having to move some of the old Model 3s because they have a revamp. So we already showed the revamped Model 3. Now they've got the revamped Model Y. So they had to get rid of some of the old inventory, and to do so, they probably took a hit on their the interest rate. They subsidized that. They are spending heavy, so that's also going to cut into the net profit. They are investing a lot in AI, the GPUs. We'll look at some of that at the end. But there is a lot of progress when it comes to full self-driving, and they have some exciting announcements that they talked about on the earnings call. So real quick snapshot here. Again, revenue 18.7 billion for auto sales. You've got the regulatory credits, only 0.7 billion. We've got leasing, energy, and storage, 3 billion. That is up 111% year over year. And the services at 2.8 billion. That is up 31% for a total revenue of 25.7 billion. And at the end of the day, a net profit of 2.3 billion. So that is how Tesla makes money. Energy, bright spot, we talked about that. Services, which is interesting, that's including supercharger revenue and software subscriptions. So I believe in the services, they're having full self-driving subscription, which is $100 a month. and then the supercharger network, which is actually starting to grow at a nice clip. Again, they did cut most of their supercharging team, so it's cool to see that they're doing more with less. Let's take a look. Gross margin down 14% to 14%. We talked about that. They have a total of $36 billion in cash. But when it comes to Tesla, again, the story is the biggest thing. The car sales, we get it. We know that Tesla's a car company right now, but they're taking their profits and reinvesting into other pieces of the business that are hopefully going to be the big kahuna down the road for them. So I made this analogy when it comes to Amazon. Amazon took their profits from selling books online and they reinvested that money into AWS, and that is really allowing them to be the big behemoth that they are right now. Apple sold computers. They took the profits from that, built an iPad, built an iPod, built an iPhone, have services, AirPods, all those different pieces of the business. So I can go on and on with other examples, but that is the thesis here for Tesla and why the stock is maintaining its price, as people are seeing the story for full self-driving, Robotaxi, energy. They're seeing those pieces of the business really start to come true. But it's going to be a while until we see the numbers, the finances really hit the bottom line. So growth drivers, affordable EV models, expansion of FSD and Robotaxi. I skipped over this. So Elon on the call, he was very positive, upbeat. So there wasn't anything that I haven't heard him say before, but besides some of the new launches that they're going to do, which is this year they're going to do unsupervised FSD launch in Austin by summertime. And then they're going to look to roll that out in other places. They did mention that in California, when a new vehicle is done, it drives itself to where it needs to go park. So they're experimenting with having the car move around already by itself in a controlled environment. But it looks like this summer they're going to be doing like a Waymo style launch where you're going to be able to book some rides in Austin with no one in the car. It's going to drive itself. So we will see how that goes. I'm sure it'll be good and bad. There's going to be something bad that happens, but that's what you have to be prepared for. A 400% increase in AI training capacity through Cortex and their new 50,000 GPU cluster. So we'll see a couple photos of that, as well as the refresh Model Y that is coming in Q1. So energy expansion, we talked about that, profitability. So their margin is compressing on the cars, but they're hoping over time to have their overall margin expand due to energy and software. So we will see if that's going to be the case. So Tesla facing short-term profitability headwinds due to aggressive pricing and heavy investments in autonomy. However, its long-term growth narrative remains intact. That's the big key. The long-term growth narrative remains intact, powered by AI, FSD, and the energy expansion. So those things are the big driver of the stock price right now. Obviously, the car business can't completely fall apart, but it's still doing very well. It's just not growing at the clip that it was. But as we get larger and larger, the Model Y is still the best-selling car in the world. It's hard to keep improving at the rate that they were for. It's already the best. It's like telling Michael Jordan, okay, you did 50, now you need to do 70. Now you need to make 80 points. It's hard to continue to grow. As long as you stay at that level and start to work on other pieces of your game, you'll be all right. So let's go ahead. We'll look at just a couple of these long-term pros and cons. So for the pros, we already talked about the Model Y. Cybertruck, one thing that was interesting on the earnings call or in their SlideShare deck, they did mention that it looks like they will no longer be using rolled steel on future vehicles. So if they do roll out another version of the Cybertruck, it sounds like they're going to eliminate the steel panels. So that might be a little bit more of an expensive material for them to use. So that'll be interesting to see down the road what the next version of the Cybertruck looks like. We talked about the energy, talked about supercharging network, AI, FSD. Manufacturing, we've talked about that, but they're just at a whole nother level when it comes to manufacturing. I do believe they announced another factory that they're going to start building when we get into the slides, you'll see there's a few different plants that they've got working on. But we've kind of talked about all these. The regulatory credits may not be a pro anymore. We'll have to wait and see what that looks like. But again, if we look at the top, regulatory credits is only 0.7 billion. So I think the incentives for people to buy is more important. So like the tax credit, that's a bigger driver than the regulatory credits is for Tesla. Global brand power. So again, #1 selling car in the world. It's not just here in California. Some of the cons is going to be the valuation. Again, a lot is priced into the story, the future growth. So if things start to wobble there, it's real easy for that valuation to get compressed. It's interest rate sensitive. We are hoping to see interest rates come down a little bit more the next couple of years. We'll have to wait and see. Earnings miss. Mexico Gigafactory delays, so that's all up in the air, so we don't know what's going to go on there. There is a lot of competition, especially in China. Luckily in here, I don't see these Chinese companies ever being able to sell their product here, but they do sell their product everywhere else. So there is competition. But Tesla still performs very, very well in China with the competition over there. But it'll be interesting to see how they evolve. And I noticed the last few road trips I've been on, I see a ton of Rivians. I was just down in San Francisco for a weekend, and I saw probably 15 Cybertrucks, which I was surprised. I don't see that many over the course of a weekend. And I saw a ton of Rivians as well. So even here, we're seeing some competition when it comes to other EVs. Elon's political influence, people are going to love him and hate him at the same time, possibly, but he's a wild card for sure. There's no clear-cut guidance moving forward for some of their financials. Profitability, we talked about that, and this is the big one here. How much of the story is hype versus reality? Only time will tell. Again, the stock price is holding up really, really well. I think right now the shareholder base, they're seeing a lot more reality. When I have my car drive itself, it's pretty unbelievable. So there's just more and more of that. And also the speed at which this FSD is improving is remarkable. I really can't emphasize that enough. If you haven't tried it, it's really worth giving it a shot, and then you'll understand what's going on here. So some catalysts. We already talked about Cybertruck, FSD expansion, the refresh Model Y and Model 3. Energy business continue to dominate. That's going to be super interesting. The Robotaxi launch. We'll see if we get an update on the Gigafactory. Roadster 2.0. Who knows when that'll ever come. We've got AI and Dojo developments. So they're really trying to push this. They didn't talk about Dojo at all, now that I think about it, on this last earnings call. But it'll be interesting as they continue to build their own data centers when they start using their own chips. So that's about it. For the catalyst. Let's go ahead and take a look now at their shareholder deck. There's some interesting photos in here. Let's scroll past all the financials. FSD miles, so you can see we're at a huge increase in the amount of data that they're getting, which is going to be a huge advantage down the road. No one has this much data. No one's getting anywhere close. Waymo has a very small fraction of the cars that are on the road, and that's it for competition. NVIDIA will be an interesting competitor because everyone that's doing autonomous driving, besides Tesla, or even Tesla in some extent, are using NVIDIA's products. So they may be a big gatherer of data for full self-driving, and we'll see what that looks like down the road. Energy storage, again, we're seeing a huge increase in gross profit and the deployments. So that is great to see. I want to see that continuing to move up. There's a huge demand for energy, however we can get it. If we're going to burn wood, if we're going to have nuclear, if we're going to have solar, we just need more electricity. And I think Tesla will be a big piece in helping that come true. Let's go ahead and take a look at some of the photos. Average cost per vehicle is continuing to go down, so that's great. Again, that's efficiency and sourcing of their own materials, which we'll see in just a moment. Right here is where I talked about the stainless steel exoskeleton technology, the cold rolled steel. Use in future vehicles is not checked, so that's interesting. everything else here they're going to continue to use. So that will be interesting. The Model Y, here's the refresh Model Y. I haven't seen one in person. I kind of like it. I guess I'll have to see it in person, but definitely the refresh Model 3. I really love the interior. Again, it's very subtle changes. You've got another screen back down here. You've got this red lighting that goes across that you can customize the color. Very subtle. It's still minimal. Some of the materials that they use for the seats have been upgraded, steering wheel, all that. But it's all basically the same kind of layout. But the materials just got a little bit better, and a couple cool things like the light, extra screen, and all that. But it's not like a huge step function improvement there. They talk about the cost, so they're now increasing some of the prices of the vehicles. So you see the Model Y starting price $34. The new Model Y starting price is $46. So I think this is a great way to kind of roll out a new phase of bringing the cost back up. Is, hey, we already put out all these old models. We gave you guys a big price cut. Now we're going to go ahead and roll out the new model, but we're going to bump the prices back up. That's a huge bump, $12,000 bump. And we will see what happens with the credits. Here is the semi-factory. I'm seeing a lot more of the Tesla the Tesla semi-trucks. I see them all the time for Pepsi. Those are the ones that are moving around the most in my area. But I believe this obviously looks like Reno. But they are scheduled to finish this later this year in Reno. Shanghai, not a whole lot to see there. Again, mega packs. That's how big these things are. And then you have a row of hundreds of these to help stabilize the grid. So this is new, the Tesla lithium refinery. This is going to start up in 2025. Again, this is going to help continue with bringing the cost down of their own goods. And potentially, maybe they could sell this to other EV or battery companies. So we will see what that looks like. I believe this is in Nevada as well. Tesla Lithium, same thing. Here is the GPU training cluster. So this is pretty unbelievable. This is the brain behind FSD and possibly Optimus. I didn't even talk about Optimus, but they did announce that they're going to start using more Optimus robots in the factories this year, and they're looking for the next year or so to really start rolling those out. So again, that's still to come, another piece of the story. Elon will tell you that it'll be a 10 quadrillion, trillion, billion, million dollar business and worth more than the whole universe. But let's just start selling them first. But that's Elon for you. So again, just another view of the scale. You can see this hallway goes way out there, and these are just filled with GPUs. Some other key metrics, we don't need to talk too much about any of these other numbers on here. So overall, I give the quarter, it's hard to grade. If just the numbers, I give it a C. It's not great. It's not falling apart completely, but it wasn't like, oh my gosh, it wasn't like a Meta quarter. Watch my next video on Meta. They killed it. But again, the speed at which they're advancing these other pieces of their business is very exciting, and that's why the stock is staying put, because people are saying, fine, we get it, you're a car company right now, but what you're working on in the future is looking phenomenal, and there's no real competition for these other pieces of the business, and you've got a guy who catches rockets out of the sky. We know you can do it. So they still have to execute, and they still have to do it at a more recent timeline, more near-term timeline. So that is our update for Tesla. Longer video today, but I feel like we got through a lot of information. So until next quarter, and we'll see. Not buying, not selling, not doing anything. I just have some covered calls on my shares. When Tesla gets a big red day, I will probably look to sell a deep put. So what I'm doing right now, again, not financial advice, I have the $500 calls sold, and if Tesla has a big down day like we see over here under 380 or so, I'll look to sell the 300 put. I don't mind buying some more shares at 300 or below, but right now I don't feel like buying shares in the 400s, high 300s. So that is me personally. It's already my biggest stock in the portfolio, so I'm in, and I'm holding tight for the long haul. So that's all I got for you guys. Have a great rest of your weekend, and peace out.